FORA.tv. The world is thinking.
So here are the 7 steps. A lot of easy money. Money ends up in mortgages. Mortgages become mortgage-backed securities, and they get AAA ratings, so everybody wants to buy them. They're moved into the shadow banking sector. They are marked to market, which means that we'll see a pro-cyclical phenomena when it comes to their pricing, and we'll get a safety net to encourage it. So, what happens then? Well, this is what you saw. The blue line, the red line, the interest rates, the blue line is real estate prices. And you can see when interest rates began to move upwards, prices start to go down. It's suddenly expensive again to buy a house. And this is what happens afterwards. In 2006, prices began to be really depressed. And if that happens, well, the rest is history. Here are the mortgages. They begin to go sour. And if they go sour, the mortgage-backed securities, the risky ones, begin to go sour as well. And they explode. And in that case, suddenly the rating institutes realize, oops, we've made a little mistake. It looks like these deals have been structured by cows. So we can't give them AAA ratings anymore. So they begin to downgrade them, which causes panic on the market. Because people don't, these are very untransparent products. So people only see the AAA rating. That's what they know that they fund, something that's AAA. Now they know that this is incredibly risky. We have no idea what we are funding. And if you don't know what you're funding, you do the only rational thing. You stop funding it. So suddenly the money markets, they see that these are too risky, so we're off. Banks realize that these are suddenly back on our balance sheets. And when they're back on our balance sheets, it's not just a double whammy, it's a triple whammy. Because you make a lot of losses, because real estate prices are depressed, but it also means that by law you now need 8% of capital to as a safety measure when you own this. And you also have to fund this yourself. There are no money markets that are willing to lend. And when this happens, well, we'll see a financial crisis. Mike Jones put it best in a syndicated column in, I think, September 2008. The customer walks into the bank and says, I'm here to ask you for a loan. And the bank responds, that's funny, I was going to ask you the same thing. Because banks, in the whole of 2007, they just have to get their hands on as much cash as possible.